Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsp@kaizencpas.com. I'm your host, Mark Valesky. Now let's get started. Welcome to another episode of Kaizen Time. I'm joined by Henry Jorn, Director of Tax and Accounting. Henry, what kind of car you drive, and how old is it?
So I bought a Mercedes about 12. Well, I bought it 9 years ago, and it's about 12 years old now. But it's only got 85,000 miles on it, so I'm winning there.
I'm jealous, actually, from that standpoint. But obviously, to keep that for 12 years, first off, its value is probably like... Right.
Yeah, it's
not what it was.
I probably pay more in repairs every couple years than I could get for the car.
But I'd say that's probably still cheaper than going to buy a new one.
That's accurate.
Yep. So what we're going to be getting into today is the auto repair industry and more or less the state of it for 2026 into 2027. So just, you're 10,000 feet up. Good, bad? Should I open an auto repair shop? Shouldn't I this year?
Let's say this. So we're talking about my car here.
Okay.
Let's just pretend
we're circling back to your car.
It's not a Mercedes.
Okay.
We'll say it's a easy to fix car, Toyota or whatever. That is the car people are continuing to drive in today's world. We're seeing way less in auto sales happening. All related to like the suppressed economy. I'm not going to go out on a leap and say we're in a recession or anything when I just looked at my stock account the other day and it keeps growing. But we're definitely in a spot where particularly the middle class is kind of, hey, let's keep our money in our pockets and maintain what we have and keep that going, which is great for auto repairs. That is kind of what they bank on in order to get sales. Of course, the smaller type of repairs, your mufflers, your brakes, etc., are all kind of dominated by, corporate or franchise companies, but your regular shop that does like the larger repairs, more complex, it's still super fragmented. There's 250,000 some auto shop businesses out there. So lots of opportunity. They make great margins, generally speaking. They should be shooting for 20% net income. Do we always see that or even see it that often? No, but a lot of that is related to, shop owners' habits, right? Habits that they've developed over time, maybe, doing things that they shouldn't be doing, not being disciplined enough. But we're not here to get into that. But yeah, at that 20% mark, right, you're well above what the market makes. Great investment. We've recently heard, some large private equity companies. This is possibly the next market they want to dive into.
So let's kind of get into it. First, you're saying, Mark, if you got the money and you know how to run a business, an auto repair shop is a good investment.
Excellent.
Okay. And if you have an auto repair shop and you know how to run it, it's still an excellent investment.
Correct.
And as long as actually, when I say this, what single thing would kill all the auto shops? Would it be if hey, all of a sudden the economy is so good, everyone just decided to buy brand new cars?
I think right now, the biggest threats are, so you'll hear a lot about there's a right to repair, litigation out there, where there's a discrepancy between information, really, and information availability. on, the softwares that cars have now.
Okay.
If you go back 50 years ago, there wasn't software that kind of ran the car like there is today. And what's happening is dealerships are trying to hold on to the repairs, based on the parent company, because it's the parent company's software, which makes it more difficult for your
local auto repair shop
to just do it. The other big thing is electric vehicles.
Yeah, it's funny. I just wrote that down because I was going to ask. Go ahead.
So obviously with electric vehicles, it's not going to be the same procedures to repair those vehicles versus, the gas and oil powered ones.
Well, and there's less to repair. That's my understanding, because there's only a battery that powers it as opposed to, full combustion engine. Then there's oil and all this other stuff. Yeah.
But some of that is like, hey, making sure that like we are somewhat progressive over time. It's just like us accountants, right? Like our big threat right now is AI. And so like, how do we kind of combat that? We are making sure that we have some investment into AI and are learning about it and ourselves making, strides to be progressive. Same thing with electric vehicles and auto repair shops. Just need to keep educating yourselves. Make sure your techs are learning about it, because eventually it's possible that could be the way of the future. And there's other things too, like I've heard of hydrogen powered cars, and maybe wind will get thrown out there, and God forbid we see solar cars, right? We got enough solar lights and all those things that they have out there now. But those are the big threats that could seriously impact the existing, framework of auto repair shops. I mean, and there's threats of like finance, right? Like, so, private equity companies coming in and scooping up, a good portion of the current existing privately owned auto shops, and, kind of getting all the leverage, just like we've seen in like just about every other business sector. But auto shop owners have more of a hand in that decision, right? We are definitely supporting auto shops. Not that private equity is bad, but again, you are selling your ownership of your business, in order to participate in that. Same thing with like consolidators. Is it bad idea? It's really not. Like as a finance person, you getting together with other auto shops that you can kind of coalition on things. It's not a bad idea, but it impacts all the rest of the auto shop businesses that are out there.
Okay. So let's get back into the overall state of the auto repair industry as a whole.
Sure.
So again, it's strong, more or less, and especially now with the way the economy is and with how expensive vehicles are,
Yep.
A lot of people are holding on to their cars. So it's a great business to be in, as long as you can run it correctly.
Correct.
But typically what we're seeing is more and more people are learning how to, run this business correctly. And I've noticed, like it just happened to me down the street, one of these auto repair shops been around forever. Probably is 2 bays. There's a gas pump in front of it. We all kind of have a good idea of what it's like and how it's run. And it went out of business because other auto repair shops that are run, I don't want to say better, but they're run in a different way, in a different fashion. I guess most people would say it's better because they're still in business and their lots are full.
Correct.
Yeah. So I'm noticing a big trend where these mom and pop shops are just getting run out.
And it doesn't necessarily mean because it's a mom and pop shop that it's happening. Again, we've talked in the past about like making sure you're increasing prices, and I know sometimes that's hard to do, like especially when you're a mom and pop and maybe you have actual relationships with your customers. But it is something you just have to do. Like you're a business. In order to survive, you have to,
You
keep
have
up
to
with the Joneses.
Well, great example. Hey, I know Helen. Helen's so cool. We go to XYZ activities together. Our kids play softball together, whatever, right?
Sure.
Do you think that person wants to see you go out of business?
Not likely.
Right? Like, even if they are your friend, right, they should understand well enough, like, hey, prices change, times change. I still need to run a business.
Correct.
Right? And your margins matter.
They matter. One thing that we've been talking about with auto shops, because one thing that's come up is the tariffs, right? Mm-hmm. And you probably deal with this with your customers, like, oh, you're just raising your prices because you got to pay the tariffs. What are you marking up those tariffs? Well, what we've actually kind of threw out there as a strategy, well, you don't necessarily have to make margin on the tariffs. You could always eat it there, right, on the parts margin. So instead of like looking at 55% parts margin as a standard, maybe you let that drop down to closer to 50, but you've got your labor margins. And that's a much easier sell for the customer, right? Like that tech has intricate knowledge about the cars that they work on.
They have tools that they bought.
So as a result, like we need to increase the price because the price for that knowledge, just like a CPA, just like an account or a lawyer or any other knowledge-based technical type job, has gone up, right? College prices go up.
The cost to even go get that knowledge goes up.
Yeah. Tech school, it goes up. It's just the way that like the economy's moving. The dollar's a little devalued now, it's something that auto shops just need to continue to do. Don't always lean into your humanistic side. Hey, I want to help this person. They're asking me for a discount. I've known Sally all my life. Let's just give her the discount. No, you got to also think about the health of your business. Not only for you and like, especially if you have a family, because business is tied to the health of you and your family, but also like if you have employees, them and their families.
Mm-hmm. And I'll piggyback off that because I do agree. And I'm also not saying don't be humanistic. Like you should care for your people. Just know that has an effect. It should not be the norm though. Correct. Like your norm, and we've talked about it many times before on this podcast, you have to be disciplined because that's what you need. Your business has to be a smooth running machine. No pun intended. Henry, anything else as we wrap this up?
Just to throw out there are, additional things that you could chase, like additional services that you could provide car owners for their vehicles that maybe you're not doing today. So the one big one that gets thrown out there is ADAS, which is like tweaking a lot of the computer systems in your car. You might want to do things like open a separate entity to do that work and kind of contain it in there because the risk level is different than, just the combustion parts of the engine. Keep your eyes open. There's always new things out there. Again, the economy is strong for auto repair shops. Don't be afraid to, raise prices. And also don't be afraid to look in at yourself and, hey, are my techs productive enough? We've heard enough shops that, are running their shop and, they're like, oh, I can't find a tech. And then, we do an analysis with them on the productivity of their techs, and they're only running 60% productive. So
They
do
don't
you
even
really need another tech?
Doesn't sound like it. All right, perfect. Thank you so much, Henry. You've been listening to Kaizen Time, part of the Blood, Sweat, and Business podcast. If you like what you heard, subscribe and leave a 5-star review. This podcast has been brought to you by Kaizen CPAs Plus Advisors, providing advisory and accounting services to help you grow your business. Learn more at kaizencpas.com or email us at bsb@kaizencpas.com.